The conversation between Warren Buffett and Bill Gates is a classic example of how Buffett's investment philosophy is grounded in staying within your circle of competence. This concept means that rather than trying to understand and predict every emerging trend, technology, or market shift, investors should focus on areas they fully understand and where they can make informed, confident decisions. Here's what we can learn from that famous exchange to help guide us toward financial success in 2025. 1. Know what you understand, and stick to it. When Bill Gates tried to convince Buffett to buy a PC, Buffett was quick to dismiss the idea, focusing instead on what he knew best: businesses like chewing gum and soda. He wasn't interested in technology stocks because it didn't fall within his expertise. And he didn't feel compelled to understand every sector just to be successful. His strategy was simple: if you understand a business, you can make smart decisions. If you don't, you're better off staying away. Lesson for 2025. In a rapidly changing world, it's easy to get caught up in the hype around the next big thing. Whether that's new tech, crypto, or speculative assets. Instead of chasing trends, focus on industries or companies that you know and understand. This might mean focusing on areas like consumer staples, healthcare, or utilities where demand is predictable, or even real estate and reliable dividend-paying stocks. 2. Patience and waiting for the right opportunities. Buffett has often compared investing to baseball. He says investors don't face called strikes, meaning you don't have to swing at every pitch. You can wait for the perfect opportunity and only act when it's right. In fact, Buffett once said, "The most important thing in hitting is waiting for the right pitch." Lesson for 2025. There will be many opportunities in the market, but not every one of them is a good fit for your goals or your skill set. The key is patience and waiting for investments that match your understanding. This approach avoids rash decisions that could result in losses. And instead, you'll be prepared when the right opportunity comes around. Don't chase after every emerging trend. Wait for the right pitch. 3. Focus on long-term value, not short-term fads. Buffett's investments, like Coca-Cola, have been successful because he invests in companies with enduring demand and lasting appeal. For example, Coca-Cola has been around for over 130 years. And Buffett recognized the power of its brand, the global demand for its product, and its ability to generate consistent revenue. Lesson for 2025. In a world full of fads, look for investments that will stand the test of time. Whether it's established brands, essential services, or industry, long-term value is key. 4. Diversify, but don't overcomplicate. While Buffett is known for his massive investments in well-known companies, he's also strategic about not over-diversifying. In fact, he once said that if you can't explain the business to a 12-year-old, you shouldn't invest in it. The idea is to only put money into what you can easily understand and evaluate. Lesson for 2025. Rather than chasing the latest investment trends, focus on building a portfolio that's easy to manage and understand. Don't overcomplicate things by trying to invest in too many different sectors or asset types. Keep your investments focused on industries and companies you have a solid grasp of, whether that's through personal experience or research. Simplicity and clarity are often the key to long-term success. 5. Seize opportunities when others are fearful. Warren Buffett has also famously said, "Be fearful when others are greedy and greedy when others are fearful." This mindset has led him to make some of his most lucrative investments during times of market downturns or uncertainty. For example, during the financial crisis of 2008, he invested heavily in Goldman Sachs and GE when others were fleeing the market. Lesson for 2025. The global landscape in 2025 is uncertain. With geopolitical tensions, economic pressures, and market volatility, but these situations can create buying opportunities for those who remain calm and look for value in areas that may be undervalued or overlooked. Remember, the key to building wealth is often capitalizing on opportunities during times of fear or market correction. 6. Leverage the power of compounding. Finally, Buffett's success has been built on the power of compounding, reinvesting earnings, dividends, and interest to generate more wealth over time. This is why Buffett loves companies that generate consistent cash flow and allow him to reinvest his earnings back into the business. Lesson for 2025. Take advantage of compounding by focusing on long-term growth. Whether it's reinvesting dividends or finding assets that appreciate steadily, compounding is one of the most powerful tools for building wealth over time. For individuals, this might mean focusing on index funds, dividend-paying stocks, or real estate that offers steady returns. Conclusion: embrace Buffett's principles for success. Warren Buffett's approach to investing might seem old-fashioned in today's fast-paced, tech-driven world, but it's a reminder that staying true to what you know and understand will always be a winning strategy. As we look toward 2025, Buffett's advice remains as relevant as ever. Stick to your circle of competence. Be patient and wait for the right opportunities. Look for long-term value, not short-term fads. Capitalize on compounding and reinvest your gains. And, most importantly, don't feel the need to understand everything. Focus on what you know best. If you can follow these principles, you'll be well positioned to succeed financially, no matter what challenges the future holds.